Okay, welcome back everyone to our news trading session. This is going to be our theory and practice sessions, and we'll go through some of the news that's been developing in the market at this moment as well. It's been a busy September, but yeah, let me know if the audio is coming through okay, and then we'll get started with our news trading session number 2, which is our theory and practice. We'll go through some of the strategies as well as the limit orders and the stop orders, all these pending orders that we can use to trade news. All right. So my name is Viren Jadot. Let's get started with a quick disclaimer. Leverage trading involves risk. Trade responsibly. Regional restrictions do apply, so make sure you check where you're trading from. Terms and conditions does apply as well, and this is for educational purposes only. It's not a financial advice, and past performance is not indicative of future results. All right. So as per usual, there's going to be a bonus for participants as well, which is the promo code that you can use to double your deposit bonus. And you should have access to the private Telegram channel as well. If you registered through the website for this webinar, you should be receiving that on your email. If you have attended a previous news trading session, you should already be in that Telegram channel. All right, so this is the code. It's on from 2025. Feel free to use the code. It is valid until the 31st of December 2025. Again, this is a one-time use code, so make sure to use the code when you're depositing into your Octa trading accounts to get the bonus. All right. Just a little bit about myself. You guys probably know me by now. My name is Viren Jadot. I'm a global micro strategist, an institutional market analyst, as well as an Ichimoku specialist. I've been trading for over 20 years right now in terms of professional trading. That would be across Forex, indices, commodities, and futures. I started out in Forex first. Unlike a lot of you guys probably started out with equity market. I actually trade equities more right now compared to the Forex market. But yeah, the Forex is basically where I started. CFDs and futures market is where I get my start in the industry. All right, I was also a former head technical analyst at GFD markets for Singapore as well as Australia. Access strategies for Invest Japan. Also, we do manage family accounts here, but we're not really retail at this point in time. So if you guys are being approached by someone that claims to be me and says, hey, I do copy trading, I manage accounts for retail traders, I don't do that. All right. Again, I'm also an Ichimoku Kinko Hill Authority. I'm also known for merging Japanese cloud trading with smart money concept, as well as institutional order flows. I've also been invited by the Australian Technical Analysts Association to provide a presentation on the Ichimoku. So feel free if you want to check out their website and look me up there. The materials should still be up there. I'm also a panelist at the Invest Fair in Singapore, presenting with financial heavyweights like Roger Montgomery as well as Mike Bellafiore. If you're an equity trader, you would know who these people are. Okay. I'm also a regular at BBC UK, Channel News Asia, CNBC, as well as Bloomberg. And I've been a trading coach since 2007, really more on the more psychology in terms of performance coaching rather than, teaching beginners how to trade, right, most of the time. All right, so let's just jump in, and we want to cover the advantages and disadvantages of news trading. We'll start with the advantages first. And I think, if you take a look at how we perceive news trading, this is more beneficial if you are a trader, okay? If you're a short-term trader, intraday trader, news trading is much more beneficial to you. If you're more of a longer-term trader, or if you're an investor, then the fundamental analysis would actually play a much, much bigger role, okay? So news trading, let me just clarify this, I think, before we go on to the advantages and disadvantages. News trading itself is not fundamental analysis, okay? So news trading, if we view what news trading is, it's really more of a specific way to trade. It's really outside of the realms of fundamental analysis or technical analysis. It's a completely different thing in and by itself, okay? So you don't need to understand the complete picture of the macro landscape to be able to take advantage of news trading. This is really more on taking advantage of that short-term volatility, and this is why I say this is geared more towards intraday traders that kind of trades specific times during the month, okay? It is a high volatility, high reward situation because if we take a look at how these major news releases impact the market, it causes strong price movements. It also creates multiple trading opportunities as well. Now, given the example that we have done every month for the past 3 years, right? So you can actually go to the channel and look up all the materials there. It's still there. I think all the videos are still in the channel itself. But yeah, for the past 3 years, I think by now it is 3 years. We have been trading the news every month live with you guys here, so you can actually see how we actually perform during those news trading. And just to give you an example, last week I think we opened up 2 trades on the euro as well as on the pound, so that's multiple trading opportunities that we can actually take advantage of. We don't actually have to be locked into just focusing on the euro USD. We can take a look at a lot of different assets that we can trade during news releases, and the strategy that we are going to be talking about, the way we trade this news is that we can actually manage a lot of trades at the moment the news is actually released, okay? It is also very time efficient because trades are very often short-lived with setups forming and resolving quickly after the news. If we get a lot of movement there in the market like last week, if you get fill in, you can actually exit out of the positions. And some of you guys probably stayed over the weekend for the positions there. But most of the time we do get out from the position within a couple of minutes. That's really what it is, right? So if we see the volatility happens in the market, we take advantage of it. If the volatility just dries up, then we want to get out of the market, right? But it is very time efficient. A lot of traders that do technical analysis probably would do other trades, right? But if they can exploit how this volatility happens, then yeah, in a short time period, if they get it right, obviously it's very time efficient because you don't actually have to stay too long in that news. And a lot of the times, the trades that we open, it doesn't actually move much until a news, a news event happens in the market, and then all of a sudden, market moves towards the direction of your exits, right? It could be a target, it could be a stop profit, stop loss level. But yeah, typically we need a catalyst, and basically news are the catalyst. That's basically the fuel. If you like Fast and Furious movies, I'm not sure the new ones, but back in the days, there's always that nitro button that we saw people press, and then the car just basically get an extra boost. That's basically what news is to the market, right? It'll just give that extra boost. It's more of a turbo button to push prices in a certain direction. Now, the next advantage, it's clear timing. So you know exactly when the release happens. We look at this via the economic calendar, so preparation is actually structured. We also have directional conviction as well. That news often aligns with market consensus. We are reading more of a sentiment in the market. It reduces indecisions in trend trading as well, right? When we talk about indecisions in trend trading, it's really more of a sideways market condition, as a lot of traders probably wouldn't want to take a position until a certain news is released. For example, with this month, a lot of traders are looking at the labor number last Friday before making a decision on Monday or Tuesday to push price in a certain direction. And then the next set of data that a lot of traders are waiting for is the CPI number, which is going to be on a Thursday this week. That would be on the 11th of September, where we will be trading that live as well. Now, next advantage, I think it's that news trading, it works with both technical and fundamental strategies, right? So you can combine smart money concept. If you're used to that, you can take a look at supply and demand. You can look at trend line setups. We can look at, the market anticipating a rate cut from the Fed, like what the market is doing right now. So you can actually combine technical and fundamental strategies to increase that probability towards news trading. So do you need to understand technical, like, do you have to be like really advanced in your technical skills, or do you have to be really knowledgeable in your macro understanding? You don't. It'll be good if you have that extra experience to help out with your news trading, but it is not a necessity. Okay. Are we going to do live trading on 17th? I don't have a session with you guys on the 17th. We will be doing live trading on the 11th, which is going to be on Thursday. Okay. All right. Let's talk about disadvantages, because this is also very important. A lot of traders, especially new traders, when they come to news trading, they thought, oh yeah, it's like super easy. There's no risk involved in it. I'm just gonna say it to you guys up front. It is actually pretty risky if you don't understand what you're doing. Okay. Because news trading here creates unpredictable spikes. It dries up liquidity in the market. And when that liquidity dries up, what happens here is that your orders might not get filled immediately. If the market moves too quickly, we might get what we call a slippage. And the spreads could actually widen. So the cost to open a position widens with it as well. So this is something that we actually don't have that. We don't actually have a way to predict, tonight's NFP, the market is going to move a certain spread. It's going to dry up. This is, market's going to move 20 pips before your orders is going to get filled. Your market's going to move 5 pips before you're going to get filled. We just don't know. Okay. This depends on what the demand and supply is in the market and how big that news is. So it could create what we would call more of an unpredictable spikes that happens in the market. Now, when we talk about the spikes that happens in the market, really, if you take a look at the candlesticks there, the focus on where that long wicks happen in the market. So let me just give you a little bit of an example here. If we take a look at Friday's movement here, you can see I'm just trying to zoom in as best as I can, but this is the Friday's candle here. And you can see what happens there. There's that long wick there, and it's actually pretty long. If we take a look at that wick itself, it is 41.9. In fact, if we measure the daily movement on that Friday, the wick itself encompasses about 1/3 of Friday's price movement. So it is actually very significant. And that's attributed to the release of that NFP numbers and the shift in the sentiments. People are making adjustments. That's basically what's causing that wick, right? So if you take a look at where those long wicks that happens in the market, then yeah, you can probably look at that and say, I don't have to understand that something happened in the market to be able to reverse the market in a certain direction. But typically, we get all this news being released, and that's where we get these reactions in the market. All right. Number two, the disadvantage here is that it requires precision in the market. If you get in too early, it's not right. If you get in too late, it's also bad. So yeah, we have to be really precise in terms of placing our orders and timing the entry and the exit as well. We might be looking at a losing position and we panic and we close out, and the market kind of just swing back, and all of a sudden that losing position could actually be profitable if you had waited maybe 5 minutes or so. So it is really more about timing. And unfortunately, we can give you that guideline. I can help you if you have any questions regarding news releases from past experiences. But again, those past experiences, it's really more to build up our mental state to face, what's going on in the market. It's not really going to be something that's 100% something that can actually be replicated going forward into the future. And again, how long have you been trading, how many times have you been trading the NFP numbers, for example, it does factor in, right? So if you ask me how long have I been trading the NFP, I've been trading for 23 years, right? And if we take a look at 23 years, there's 12 NFP releases, so I'll multiply that by 12, that's 276 NFPs. Now, that's 23 years, it's a very long time. 276 months, 276 NFP releases. I'm now at more than 280 if we look at that, because I'm approaching my 24th year. But yeah, 280 might not seem a lot from a professional standpoint, but if you look at the time invested into it, it is a lot. It's a lot of NFPs and TPIs and all of these news releases that I traded, okay? If you're new and you just traded for 6 months, and if you trade all the 6 NFPs, then it's only 6 compared to my experience of 280 NFPs. It's a lot. In terms of comparison, it kind of pales into comparison, because if I were to get a percentage for that, I'm at 100%. And new traders that has been trading for 6 months, they're only 2% of my journey. So it scales. It does scales with experience as well. Okay, so this is something that we can teach you the framework, but it's something that you have to walk through in terms of that path and in terms of that experience. Okay, all right. And then we also got a whipsaw risk as well. So price may fake out in both directions before committing to a trend. And I can give you the example here last Friday. I think what happens was pretty much that. But yeah, let me just zoom in and show you what happens. 8th of September. No, that wasn't 8th. This was this one here. We were trading that live at the release. This was the release. Let me just highlight that. Let's see if I can get that tool. So I'm going to highlight that, and I'm going to show you the, let's see if I can pull back the 5-minute time frame, but hopefully we can. All right, there we go. So you can see this is what we would actually consider a whipsaw in the market. And it's very typical of the NFP, right? If we take a look at the breakout range before the news was released, it's basically this one here. So what we were anticipating is that market is likely going to break. It might go in a certain direction, but eventually on that Friday night itself, it actually kind of pulled back down. So if I had to zoom out, and you can see what happens here, it does pull back to where the initial breakout happened. So this is what we would call that whipsaw. You can see the market goes up and then goes down. And then when you thought, oh, you know what, market's just reversing on me. We had a look at the NFP number. It was really bad for the U.S. economy, but on Friday, market's just reversing on me, and it just take me out on Monday. But if you take a look at the reality of things, when that pullback happens, once it's completed, market does go back up again. So this is what we would consider that whipsaw that happens with news trading. If you understand the movement during news releases, again, that would be through experience, or I can share that with you every single month and guide you with live trading sessions. But yeah, there is always that whipsaw risk as well, okay? Now, the other thing is, don't force yourself into a trade. If you don't see a reaction in the market, you don't typically want to place a trade, because big news sometimes gets shrugged off by the market entirely as well. For example, we got this inflation number coming up on Thursday. So if everyone is so convinced that the US labor market, it's really in a bad condition, they would ignore whatever happened with the CPI numbers. They would ignore the high inflation, because they would argue that the Fed needs to save the US labor market as one of their mandates, and it will be the main focus right now because it's doing so bad that they will actually have to ignore inflation increases just to cut interest rates. So we might actually not see a reaction on Thursday. So that could be a possible scenario. I'm not saying that we're not going to be looking at a reaction on Thursday. I'm 100% sure there will be a huge reaction in the market, but just this is really more of an example, right? Now, last thing is, a lot of beginners thought it is beginner friendly, It's not beginner friendly. Okay, at the very least, you need to attend this session to understand how to trade news properly. You don't really want to open the position if you don't have that confidence, if you don't have that discipline, if you don't understand risk management. You shouldn't be trading news, because I think this is the fault that a lot of not news, right? Someone that is new to trading, they don't understand the risk management aspect of trading, which is really important. They don't understand the psychology of trading. And they thought, I can just jump in, open a position, and not worry about when to get out. If you don't have a plan to get out from that trade, then you shouldn't be trading the news yet, right? If you're still in that phase where, I'm trying to figure out what my strategy is, I'm trying to figure out where to place my stop loss, trying to figure out where my exit levels are. News trading should be your first entry or first foray into trading, okay? At the very least, you have to have that understanding of risk management and, really strong discipline as well. Yeah, and the fault that I have here is not that you're wrong in terms of understanding it, because when it comes to news trading, experience is more important. So you need to spend time in the market to understand from past experiences, okay, this is what happens and whatnot. But yeah, just give me 1 second. Hold on 1 second. So yeah, that's the very least that you need to have. You need to have that, discipline. You need to have that understanding of risk management. You don't need to fully understand technical analysis. You don't need to fully understand fundamental analysis, but you need to have at least a way to understand the risk that is actually involved in this trading. Okay, very important. And probably a lot of other educators out there probably doesn't want to talk about this. I don't think it's fair to you guys if I don't talk about one of the biggest risks here, that news trading is not beginner friendly. It's not as easy as how we do it every month. Again, 280 months in the market. I know what I'm supposed to be doing, but the way we set up the trades during live trading sessions, if it's really hectic and a lot of positions are lined up, then yeah, I don't think new traders can actually do that in that short time of a window. Okay. All right. So we got different type of market moving events. Number one, especially in 2025. There's a lot of hot news or unexpected news or breaking news, or whatever you want to call it, right? These are basically your unplanned events that often cause sharp market reactions. It could be terrorist attacks, it could be military conflicts, it could be natural disasters, it could be political, it could be Trump talking about tariff, asking for unreasonable stuff from the whole world. Which kind of have a spillover effect globally right now, just from what he does. Okay, so this might poke the wrong way to some of you guys, but let me just explain this. If you take a look at what Trump has been doing in terms of his pro-America, for America, make America great again, it's really more of a protectionism policy. Okay. Some people call it authoritarian and whatnot. I don't really, that would be the case. I think it's more really on the right-wing side of politics. So we are delving deeper into here because that's basically what has been spilling over globally right now. And it causes a lot of strains between relationship between countries, right? So for example, if we take a look at what's going on in Japan right now, what's going on in Australia right now. If you haven't been keeping up, there's a lot of anti-immigration protests. Now, if you're thinking, oh, I thought Japan is not racist. Well, Japan, it's not racist. I don't think Japan is racist, but they're very defensive of their culture. And if you take a look at what's going on in Europe, if you've been watching the news, even if you're not in the market trading the news, you take a look at what's going on in Europe, especially in Spain and Italy. There's actually a lot of protests to get tourists out of their cities, right? So it's more over tourism. Tourism, I think, is good for the economy, but thoughts like this when Trump says, "Oh, it's for America, America first, everything first," right? Obviously, the impact of having immigrants, having tourists in your countries, it does push this inflation up. So, if Trump is doing it, what we're looking at right now globally is more of a spillover effect. It's not really bad as of yet, but it's already causing a lot of problems. It's causing a lot of political strains at this point in time. So we got things happening in Europe, Japan right now, definitely for sure, especially with the prime minister resigning, and then the leading party obviously is faltering. We got more of a new party coming in that's really more anti-immigration, pro-Japanese. We got stuff happening in Australia right now at this point in time. Obviously, again, anti-immigration. It's really not them being racist, but there are certain drawbacks with all these influxes of immigration as well. And I think one of the complaints in Australia is that the Australians are not getting that privilege. I think a lot of privilege are being given to migrants coming into Australia. So obviously, does that impact the business? Of course, it does impact the business. When that happens, is it going to impact the economy? Of course, it's also going to impact the economy. But yeah, this is not spillovering globally just because of what Trump was doing. And that's just not that. We could still have the tariff issues as well. A lot of stuff happening right now. So those are your hot unexpected news. We just don't know when that is going to happen. We don't know when conflicts are just going to flare up. Obviously, we got a little bit of a tension developing right now in the Middle East, as well between Russia and Ukraine. We thought it was cool, and then it was on again, and it was all that kind of stuff, right? So those are, I think, one of the risks when it comes to trading in the market, because this hot news, they're not scheduled. It's not like Trump wake up one day and announces to the world, all right, next week I'm going to say this and this at a certain time period, and this is what I'm going to be saying. You guys can prepare for it. It just doesn't work that way, okay? But we really want to focus more on the schedule or periodic news. These are your regularly published economic indicators. These are your central bank communications. This week we have the ECB interest rate decision, for example. Well, this is something that we can predict, right? This is something that we have a consensus for. Inflation indicators, the CPI, the PPI. PPI is going to be tomorrow. CPI is going to be on Thursday. We have a consensus. We have a forecast in terms of what the numbers could be. It will likely be higher this week. Then we have the GDP numbers, for example. And last week we have the labor markets. We got the unemployment rate. We got the non-farm payrolls. And then we got the business activities, the ISM PMIs. So yeah, those are your news. And if you're new to trading, it's not that hard. You can just go to Octa's website here, and under analysis and education, if you go under analysis and education, under analytics, and there's actually economic calendar. So if you click on that economic calendar there, it'll just show you what time is it. All right. So depending on where you are, obviously you can adjust the time frame. But we're working on that GMT time frame here right now. Would be London time. But yeah. So what's coming up? We're going to be looking at news event on Tuesday. This has already been out since morning. We don't have a lot. This is not until a little bit later there. But yeah, these are your releases. So I think we have one today. That's the non-farm payroll benchmark revision. This would be the yearly revision. This is actually pretty high. You don't actually see this a lot every month. So there's not a lot of experience that goes into this as well. So just be mindful of when that happens. But yeah, you can check it out. You can take a look at what's going on this week, and then we can actually filter it as well. If you're not trading Australian dollar, you can tick off Australia. If you're not trading Canadian, you're not focused on what's going on in China, you can tick that off. Greece, I normally tick it off. Japan, I'll keep it. I'll trade the euro, I'll trade the euro yen, New Zealand, I'll take it off Portugal, the UK, US, EU, Switzerland, I'll take it off Sweden, And now I can take a look at what's really important. What do you want to look at? You want to look at liquidity and balance of the countries. You want to take a look at some consumption and inflation numbers. You can apply all these filters here. And I think one of the most important ones is actually holidays. That's really, really useful there. So I want to focus more on high impact news. So I just want to hide the low impact news, the medium impact news, and really just want to focus on the high impact news and see what's going on this week. And here, this is what we have. This is yesterday's event, the no confidence motion against French PM. That has already been passed. This is not scheduled. It is actually a last minute call to just confirm that, the prime minister is resigning. People doesn't want him in the office. So this is actually unscheduled, okay? But this week, we're going to be looking at the PPI numbers tomorrow. And we're also going to be looking at the NFP numbers revision, which is going to be today. I believe it is actually going to be today. In about 1.5 hours time, that would be the release of that revision. So you can prepare for that. Now, on Thursday, you got the ECB numbers, interest rate decision, they're not expecting a cut. All this is there. And if you want to click on it, you can actually look at what's going on there, a little bit of a description of what you're going to be trading. If you don't understand what CPI is, then you can take a look at that as well. It'll tell you what it is, who collected that, a little bit of information into that news. So this is how you learn to trade which news, because not all news are the same. Some news are going to be much, much more important. Okay. All right, so if we focus on the most profitable news for event to trade, I'll just try to wrap up the theories first, and then we can go into the practice here. We typically look at the CPI numbers. This is very important because these are inflation data. This is basically what drives the bank interest rate, central bank rate decisions, right? In typical market reaction, we typically get a strong dollar reaction. It does impact the gold market. It does impact the FX market as well. Someone's probably going to ask me here, is it going to impact the crypto market? It doesn't have that huge of an impact into the crypto market. So let me just answer that before you ask that question, okay? Right. Then the NFP numbers, those are your job reports, right? It does trigger volatility across only USD pairs. US 30, gold, FX, they all spike. We got the FOMC interest rate decision. This is going to happen on the 17th. That's probably why Faisal is asking, are we going to be trading on the 17th? I don't have a session scheduled on the 17th. Not that I know of. Unless Octa decides to do that last minute, ring me up and say, hey, let's do one for the clients. But right now it is on schedule. I actually don't have a schedule for a rate decision. It does have an impact into the direct interest rate movement of the economy, dollar volatility, equities and bonds whipsaws a lot. GDP reports, this reflect overall economic health. We are really more of looking at a currency valuation adjustment in terms of a certain economy. ISMs, manufacturing numbers, has it been important? It hasn't been important as of late, okay? So the data that we listed here, these are the scheduled events that tend to offer consistent volatility and opportunity. Any other news outside of what we listed here doesn't necessarily move the market. Okay, it might move the market, it might not move the market. These are your high impact news, and amongst the high impact news, these are the data that are guaranteed to move the market significantly. Okay, cool. So you can combine scheduled news anticipation again with technical confluence for high probability setups, and that's basically what we do as a trader. All right, I want to talk very quickly here about the three main phases of price movement. It's really not sideways, uptrend, and whatnot. This is completely different. What we're trying to show you here is that the movement before the news releases is what we would call the accumulation, right? People with extra information, or at least they have an analyst on board to kind of figure out where things are likely going to go. they have more knowledge than a lot of retail traders out there. Okay, active retail traders, because I'm gonna categorize two retail traders here. The active retail traders that understands the technical side of things, and then the other retail traders that have no clue or are new to trading and relies on trading signals or asking people, hey, should I buy here? Should I sell there? Should I get out here? Where should I buy? Where should I sell? You know, those traders are completely different. We're not gonna classify them the same way as traders that are actively, you know, developing their trading skills, trying to understand what's going on in the market. Okay, so those that in the know, they're the accumulation. They're gonna be moving in where the market is trading in a range bound market condition. That's where we say it's an accumulation, because this people, they trade big, right? And for them to have a lot of trades in the market without spooking the market, they would actually have to buy in or get out of a position slowly. That's why we say it is an accumulation phase. They're accumulating positions before a news is actually being released. Now, once the news is released, what we saw here is that you see that initial spike in the market, because a lot of that retail traders that understand what's going on here, or the technically driven traders, they will get in during that news releases. So that blue phase that you see there on the chart, that's your participation phase. Okay, so 1, 2, and then when public gets the news, maybe 50 minutes later or half an hour later, or maybe someone posted a trading signal 15 minutes after the news is released, well, they can't react to that news price, right? So they can't buy in at that or close to the level before or at during news releases, because they'll be entering late into the market. They'll be so late that the market has already run up so high, they actually don't have, you know, a chance to be profitable in the market. It's really more of a butchering rather than anything else, because people that come in late, they will jump in at that distribution phase when everything just runs up very, very quickly, because they got in late. You know, it just boosts that extra volume. But if you take a look at what happened last Friday, when the market runs up and then it crashes down, that's because people that were accumulating their position get out when all these late traders come into the market to buy into the market, right? So basically, people that were in phase 1, they were saying to people in phase 3, hey, you want to get in? All right, please take my spot. Here's my position. You want to buy? I want to sell. And that's why we call it distribution. And that's where you see that movement on Friday here. So if you take a look at the whole movement on Friday, I would classify this area here really more of that accumulation, all right? And then this part here where it's breaking out a little bit, that's the participation during news releases. And people that come in maybe around this area here, that's actually the distribution phase. So people that got in late up there, people that got in at phase 1, they're getting out of their positions there. This is what we call profit taking in the market, and the market just comes back down, right? So you can actually see what's going on in the market with the example that I've just given it to you. So we got the green area there as, you know, distribution, accumulation, and then this one here, I'll change the color and, you know, we'll label this participation, and this red one here is the distribution. So let me flip to the PowerPoint, and you can see it's actually the exact same thing. But a lot of people just kind of ignore these 3 phases. They just don't want to understand these 3 phases and just move on, you know. But it is actually very important. It's not really technical because I'm not looking at an uptrend, downtrend, or anything like that. We're really more looking at how the sentiment in the market is. We're looking at learning the psychology of the market itself, okay? So this is not technical analysis. This is really more understanding into what the mind of the market is. So let me give you a couple of general rules before news trading as well. So you need to study the market context, understand the dynamics of the currency that you plan to trade or assets that you want to trade. Make sure you understand that it has a certain correlation to that news releases. If it doesn't have a strong correlation, then there's no point focusing on that assets, right? So you also have to understand the context, and that's why we were doing this every month, so to give you guys a little bit of a context before the news is actually being released. You can also review past reactions to similar news releases to identify behavioral patterns. As I say, new traders might not have that experience that I have, but they can catch up, because if they can have that data set, they can review what has happened in the past and replicate it. So it's not going to be 100% replication into what the market reaction is, because they can't see the market moving in real time. But at the very least, about 80%, it's something that can actually be learned if you take a look at previous patterns that happened during the exact same release, okay? So you should also mark key support and resistance levels on your chart to anticipate breakout or reversal zones. You should also define your strategy, whether you're trading the news spike, are you going to be fading the reaction? That's why we have that, 4 ways to trade the NFE last Friday. And then you need to have an execution plan, or basically your trading plan itself, right? Are you going to be scalping it? Are you going to stay there for 1 to 5 minutes? Are you going to be there intraday? Then you should be looking at the 15, 30 minutes chart, or you're going to be swinging the trade, then you want to be looking at an hour or 4 hourly chart, okay? Control your risk, determine the maximum acceptable loss per trade, and apply proper position sizing. So last Friday, we got a question on, what should I do in my position and whatnot? Well, a lot of the information I don't have. I got your entry, I don't know where your stop loss is, I don't know where your exit is, I also don't know how big your trading is, I also don't know how big you're risking your equities on it. So make sure you do all this calculation in terms of your risk management, right? So use stop loss, use trading stop if you want to. I don't use trading stop, I use stop loss, that's completely fine. All right. Also decide whether the trade will be short term. Are you going to be staying in that trade for 1 to 50 minutes? Are you going to hold it longer than an hour? I think last Friday we actually hold it longer than an hour. So yeah, it has been working out. Okay. So let's just jump into the meat. We got 50 minutes left, and I want to jump in very, very quickly here. It's not hard to figure this out, but I would really suggest that if you're really, really, really new to trading and you don't have a good grasp of this pending orders, if you kind of flip them around, or if you look at buy stop, okay, you have to stop for a second or two to figure out, okay, what is a buy stop? What is it for, right? I would say print this out, screenshot it, print it out, and then just put it on your desk, put it on the wall next to you when you trade. This would be super simple, all right? So let's explain buy stop first. The use case for this is that you expect price to break above resistance and then continue rising. And the strategic intent here is that you want to enter on a momentum breakout, which is more of a trend continuation. So for example, if price breaks above 1.1, then you want to buy at 1.1005, because you're expecting further upside. Maybe you're expecting price, once it breaks 1.11, 1.10, it's going to go to 1.11, 1.12. So you want to be buying on that breakout. You use a buy stop, okay? Now, the sell stop is the opposite of this. So very simple. If you expect price to break below a support and continue falling, then you want to enter on the downside breakout. This is your strategic intent. So if price breaks below 1.0920, you want to sell at 1.0915 for trend follow through. All right. Okay, so that's your buy stop, that's your sell stop. Now let's take a look at the sell limit here. Sell limit, it's very different. If we take a look at the resistance and the support that goes on in the market, you can see the sell limit here. When do you use the sell limit? You use the sell limit here when you expect price to retrace upward into a resistance, and then fail at that resistance. The strategic intent here is that you want to catch a pullback before a downward move. So for example, price is rising toward a known resistance and you set a sell limit just below it. And when do you use a buy limit? You use the buy limit when you expect price to bounce off a support. Then you use a buy limit. Again, the strategic intent here is that you want to enter at a discount during a retracement. For example, price is falling towards support. You're looking at a bullish order block at the downside. You want to place a buy limit near that zone. Okay, so some people call it buy zone, sell zone, demand zone, supply zone, whatever you want to call it. But if you're expecting market to go in a certain direction and then reverse, then you want to be using the limit orders. Okay. So the way to simplify this is just when you look at stops, it equals breakout continuation. When we look at limits, then it means that you're anticipating a reversal or a bounce, something that could actually flip in the market. Okay. So one of the key things that we take a look at, and the reason why we talk about the accumulation phase and whatnot, because we need the corridor of volatility for us to take advantage of the buy sub and sell sub strategy before a news is released. So this is actually one of the fastest way, if you guys have been watching my sessions and wondering, okay, how does this guy figure out that we are, tonight we can't trade the euro, it's a little bit risky, it's a little bit risky on the selling and whatnot. We trade it by identifying the corridor of volatility. So we were looking at whether or not there's actually an accumulation phase before news is actually being released. If there is, then that's good, because that's when we can place our buy sub and sell sub. Now, if you take a look at the movement in the market here, it's just moving in a range bound market condition, right? It's just not going anywhere. It's not going up. It's not going down. It's waiting for something. We just don't have that catalyst. And this is the problem with a lot of traders that are not anticipating news or don't understand the fundamentals, or don't believe that news can actually impact the market in a certain way. Market pretty much stays in a pause if they are anticipating a huge release. So to catch this, we just place two orders. We place a buy stop above and a sell stop below. And when the news is released, it will hit one of this trade, like what happened last Friday. It hits our buy stop on the euro as well as the sterling, and then it just shoot up. Then you can cancel the other order, because you have to cancel the other order. If you leave it there and market reverses, then you're going to be hedged in. So don't do that, right? So once your buy stop is triggered, you're in a long position, like in this example here, cancel your other orders and just let it run. Obviously set a stop losses, set your take profit target. But what is the beauty of this? Typically, if we have that high volatility so far, which is huge, it will push price beyond a certain resistance level, take it really far from your entry level, and that's when we can actually move our stop loss to break even. Then it becomes a risk-free trade. So I think that's the advantage here. Okay, so let me just give you an example very quickly on what to anticipate. For example, I'll do this later. All right, so if we take a look at we'll take a look at the sterling here. There's not really a corridor of volatility. I'm just trying to figure out what's going on here. What kind of example that we can pull. Not really. Euro yen, sterling yen. Yeah, if we take a look at this and say, okay, there might be a certain range here. If we take a look at how the euro has been moving, for example, it is moving in a channel at this point in time. So it's really more of a dynamic level there. But if we kind of lock what's going on, we would consider if price break above this resistance, then I want to be in a long trade. If market breaks below this support trend line that we have, then it might actually run to the downside. So we could look at this and say, all right, that's how we place our trades. We're anticipating a couple of things. If we break this, then it might actually go down more. Or if it breaks to the upside, it's likely going to continue to trend to the upside. So this is just an example on how to place the buy limit and the buy stop and the sell stop orders. But that's not really the case here that we can say for the euro. I think the euro, it's more suitable for a limit order at this point in time. So it just gives us a really good example as well. All right, so let's take a look at this. And again, I'm just gonna right click on the chart, go to trading, and we want to go with the buy stop. This is also where we can adjust where our take profits and whatnot. Okay. But yeah, that's how we can adjust it. If the trade's not open yet and there's a new range, maybe there's a new resistance that might show up on the 15-minute time frame. What if price goes back above this previous support there? What if it fails to test that as a resistance? Then you can go a little bit higher. You can go for that long positions as well. So that's the buy stop and the sell stop. Very super simple. But the other thing is the buy limit and the sell limit strategy. We're really focusing a lot more on the existing resistance or existing support to be able to use this limit strategy. This one here does provide us with, I would say it's more for higher technical skills because if you don't understand technical analysis, it's impossible for you to use the buy limit and sell limit strategies. So let me just put it bluntly, okay? This is not for beginner. The buy stop and the sell stop, that's easy for beginners. The limit and sell limits, the buy limit and sell limit strategy is not for beginners. At the very least, you need to have a really good understanding of figuring out where the support and resistance is in a market to fully take advantage of these pending orders, okay? But if you take a look at the difference on what we have here, the stop losses here, it is just a lot wider compared to what we're going to be looking at the limit orders. Because if you take a look at the limit orders here, I'm looking at that previous high, and I'm looking at that. What if price goes back up there? I'm gonna get a much better price to short it because I'll be selling it high where people are thinking of buying. I believe in that resistance, and I think it might actually fail. So I'll place a sell limit order. What happens after price touches it? It just drops down very quickly. So Faisal is asking about gold. I think he was the guy that comes in on last Friday's session without a proper exit plan. This is the exit plans that you need to kind of figure out. So for example, in gold, when I gave you the outlook from last week, we talked about 3,500 as a potential resistance. If you guys manage to catch that, we're anticipating people to kind of liquidate at 3,500, 3,600. Then you can take advantage of that and place a sell limit strategy because you'll be so close to resistance that your stop loss, it's so small, it's just crazy. Your risk reward ratio, at the very least, with sell limit or a buy limit strategy, we're looking at a 1 to 2 at the very least in terms of risk reward ratio. Typically with a limit strategy, it's closer to 1 to 5 in all honesty. Because we are entering very close to a potential resistance or a potential support, or at the risk, if the market breaks out and kind of clears out that resistance, invalidate those resistance and support, you'll be taken out. Of course, you can do a little bit of a combination as well, just do a little bit of a backup. In the market, if you are going to be stepping away from your computer, we thought at this and say, okay, what if I place a sell trade there at that resistance? Yeah, if it's successful, it's great. Well, what happens if it hits a stop loss? So I haven't actually explained this before, but I think I'll just explain it now to you guys. So let's take a look at an example here. This is just an example, all right? Just don't take it at face value and say, oh, this guy's telling me to do this. No, I'm just giving you an example. It is a practice session tonight. So we're not going to be looking at live analysis or anything like that, but I'm just going to give you an example. I'm looking at this and I just draw a channel here. If we adjust the channel itself, then we actually have a support trend line that would actually be able to support the euro. And since price is so close to that level right now, well, what do we look at? What are we looking at? If we take a look at the psychological price level, we're going to be looking at 1.17, and then the next one is going to be at 1.1725. So I like 1.1725. What I'm going to do here, what are we anticipating is that 1.1725, it's going to overlap with that support trend line very, very soon. So I like this. This is what we call the confluence in the market. So I'm going to place a buy limit at 1.1725 on the euro, right? And at the same time, if we take a look at the other low that we have in the market, which is this one here, at 1.1700. So it's actually very close to 1.17. So what's my trading plan here? I would say, we can take a look at this. Let's see if I can modify this. This is not showing up on me, but if we take a look at this and say, okay, this is basically going to be my stop loss, right? And I'm going to draw a line here. That's basically my take profit, because I'm aiming for price to potentially go a little bit higher than where the previous price is. So that's my take profit, and that's my stop loss. This is my entry point. So we can take a look at that and say, okay, this is my take profit. Okay. Okay, that's my take profit, and this is going to be my stop loss. So that's reasonable, right? Because if you take a look at that, it's very reasonable. Let's see if I can make that changes here. Modification is not showing on it. But yeah, if we take a look at this and, okay, how do we manage this risk? What if it breaks to the downside? What if it takes out the stop loss? What if it takes out the stop loss? Well, if it does take out the stop loss, what happens here is that you are anticipating that sell stop, right? So beyond my stop loss, I would actually have my sell stop. So I can actually have, the same, two different orders here. If price goes here and didn't hit my stop loss and then bounces back up, then I would be profitable, right? But if price instead slides lower and hits my stop loss, it might drop down very, very quickly. I might miss on a huge trade. So I don't want to see that happen. Then I'll place an order here, which is a sell stop. So if it does collapse and it slides down further, then I can be in a sell position and aim for a potential lower target. So we can actually do 2 pending orders on the same currencies as well, because we can plan all this. Okay, if scenario 1's happen, this is what's going to happen. If plan A fails, then my plan B is, if that would actually take out the support trend line, it would actually create that collapse in the market, then I would be prepared for that as well. Okay. So that's how we are going to be using the buy stop and the sell stop. All right. So we are going to be a little bit late here, but yeah, you can also trade after the news releases. Limit orders, typically we don't trade before news. Limit orders, we typically react to news. But yeah, like today, if there's a news being released right now, in about an hour's time, we can already prepare the movement for the euro. We have two potential movement in the market. So you can actually use the buy stop and the buy stop, sell stop, the buy limit, sell limit orders, before news releases to prepare. I think this is not the AI generation, right? This is very systematic, right? Trading is supposed to be systematic like this. So you give prompts to AI right now. If you are the younger generations, I'm still behind on that. I still need to ask people to do stuff for me. But yeah. If we take a look at that, it's not really that different, okay? Because my job as a trader is to create several plans, several scenarios. If plan A fails, what is my plan B? Okay, at the very least, you need to have a plan B. A lot of traders don't have a plan B. What drives me and what, I'm not gonna show off or anything like that. The reason why I lasted this long, 23 years in the market, and, I would say I'm really good as an analyst, it's because I don't look at plan A, B, and C and be done. I actually plan A, B, C, D, E, F at the very least to every thing that happened in the market. Okay, so we look at different case scenario. You know, we always ponder about what if this happens, or what if he says that, what if, you know, Russia attacks today, what if Russia says there's going to be peace with Ukraine today. You know, all this scenario has to be played out because we just don't know what's going to happen. So the preparation is that, okay, if this doesn't work out, this is basically the scenario that the market is going to move on to. Okay, simple as that. So I'm just going to be answering this very quickly. Just a very quick test if you guys are ready. If you can see a surprise rate hike from the Fed, which assets are likely to spike, and what would you avoid trading? I would trade anything with the US dollar. I wouldn't trade anything that's not related to the US dollar. If you see a surprise rate hike from the Fed, the assets that are likely to spike is anything to do with the US dollar. The second asset to spike would be gold, okay, because that's the correlation between interest rate and gold, okay. The NFP report is due in 10 minutes. What kind of pending orders would you place and where? You know, we want to be looking at whether or not there's an accumulation phase in market, and we want to use the buy stop and the sell stop orders. If price breaks below a major support level right after the CPI release, would you use the sell stop or use the sell limit? Well, price has already broken a major support level during the release, so we want to anticipate for the market to pull back a little bit, test that broken support, and then continue down. So we will use a sell limit to get a much better entry into the market. Okay. So the fourth question is the 4 type pending orders that we talk about: the buy stop, the sell stop, the buy limit, the sell limit. They are useful for basically 2 scenarios, right? If we want to see a breakout scenario, you want to use the stop orders. If you expect a support or resistance to hold unbroken and fail, we want to see a rejection, we want to see a bounce, then you want to use the limit orders. Okay. All right. This is I keep forgetting to change the slide, but the code is non-farm 2025. We actually don't have time for Q&A sessions, so we'll have to wrap it up. The next session that we have is going to be on Thursday. That would be on the 11th, same time, same place. As always. We will be talking about the CPI numbers. We'll give a little bit of an explanation on the CPI, but I think we'll skip a lot of the theories on Thursday because I think there's a lot of scenarios that we need to talk about on Thursday. So yeah, if you want to know the context of why we're looking at the inflation, why is it going to be important before the FOMC interest rate decision the following week, which is next Wednesday, then yeah, please come into the session on Thursday, where we will be trading this live right here with Octa. All right. Thanks for attending. Have a fantastic week ahead, and I'll see you guys on Thursday. Stay safe.